Is crypto really that complicated? Is it really that hard to find out why prices are going up and down? On days like today, we might get a glimpse into what are the actual mechanics of crypto. Because PUNDIAI is up 163% in a single day. And it seems like this happened out of nowhere. Yes, some people still try to explain prices with news, and there has been an inclusion of PUNDIAI in the NVIDIA Inception program. But is that really enough to increase the market cap of a token by 80 billion roughly? PUNDIAI is the prime example of what happens to a cryptocurrency where the liquidity gets concentrated in a few hands, where the market makers take over everything. There's a pretty website that might fool a few retail investors, but if you're digging a bit deeper, you will see there's more smokes and mirrors than most people want to believe. It looks like the token is highly decentralized, that 65% have been airdropped, and that the team only holds 15%. But once we look at the on-chain data, we will see that the Ethereum-based token has only 225 holders. There's another version on Base that has 46 holders. Here's the token ownership by wallets. So 3 wallets own 75% of the supply. If you look on chain across different wallet sizes, we've got the wallets on the left that have at least 100 PUNDIAI tokens, so that's a bit over $1,000. There's only 44 such wallets. For $10,000, there's 21 such wallets, and for $100,000, there are 6 such wallets. Those are incredibly low numbers. Usually we've got thousands, if not tens of thousands of holders among retail. That's not the case for PUNDIAI. Instead, we see how all the price discovery happens on BitHump among all places. There are no perpetual futures, so all of the price discovery happens in a black box. We don't know who's buying or selling here. Now, this is the reason why we are in crypto in the first place, right? We like the transparency. We like to see who's buying, who's selling, who's holding the token. This is not what is true for PUNDIAI. It's all just held by the market makers, by the centralized exchanges. PUNDIAI launched at $12 and then got depressed by the market makers down to $4. Now we see the manipulation squeeze. That probably brings in some attention by some retail investors that are seeing this big bubble, that think that AI is the future, crypto is the future, and this thing has some positive momentum, and those people are likely going to get burned. Now, I'm not sure if we see more manipulation, right? I cannot look into the heads of the market manipulators. All I know is that this is not organic, and it's probably better to stay away. When we buy a cryptocurrency, we at least want to see some kind of organic growth. We want to see a real holder base. When we bet on falling prices of the cryptocurrency, we at least should see low volatility and some kind of an expanding token supply, some kind of predictability, right? Because if a token from one day to the next can go up by 100, 200%, it's incredibly dangerous even to bet on falling prices. Not everything that's green is a good investment. Not everything that shines is gold. Now, finally, we enter a market again where everything is going up. And I think it's important to seize the opportunity, not just randomly buy things, but buy the things that tend to go up more than others. Now, that's easier said than done, but let's have a look at Virtual, for example. How can we find something like Virtual's protocol not just a week ago, but how can we pick it up early, as in when it just was a few cents? I don't think that we have to reinvent the wheel. We don't have to be the best traders on the planet to figure this out. We can just have a look at the people that tend to move markets, that tend to make good trades. For example, here's somebody that did not necessarily always do the best trades. So here are signals by Ben Armstrong. He got some virtual tokens very early on, allocated for a promotion. He sold this for very low prices, 1.4, 1.3 cents. So yeah, following people like Ben Armstrong or BitBoy Crypto is probably not the best idea. But there are some people that do make regularly very nice trades. For example, this guy over here, Brian Young. He's got more than 2 million subscribers and he mainly talks about crypto. He was one of the very first influencers that we track that bought virtual token for very low prices, 15K over here for 7 cents. The community talked about this quite a bit, 61 comments. That was more than 1 year ago on the 21st of March 2024. And so the rest is history. The price went up by more than 6,000%, even after a subsequent crash and then the current recovery. The price is still up by almost 2,000%. Crypto is not necessarily a game where the people with the best fundamental analysis win. I think it's much more of a player versus player game. It's much more of a game of insiders versus the not so well informed retail investor. Even though YouTubers like Brian Young do very good crypto content and they also trade well, it's very hard to figure out where do they actually put their money and how much do they invest. Even when I search here for the Virtuals token, I can't even find a dedicated video on Virtual on his channel. The token might be hidden somewhere in those list videos, but that's about it. Now the first dedicated video on Virtual's protocol was published half a year ago over here. That video outperformed the average video. The average video is here in gray and the performance of that video is in blue. At the time, the price was at 41 cents. And even from that point onwards, we went up by more than 1,000%. So I publish videos on various altcoins regularly on this channel. I try to find the ones that still have a lot of upside potential. So feel free to subscribe over here. Now, if it's that easy to make money just by looking at what other people are doing, how do we actually know that early what, say, BitBoy Crypto or what Brian Young is doing? The answer is wallet tracking. With some on-chain analytics, we found out what kind of wallet is owned by what influencer. For example, over here, we found 5 wallets of Brian Young. In total, we track almost 600 wallets. So that's of various influencers. And the way we find those wallets is by looking at what kind of NFTs are they holding, what kind of tokens are they holding. Let's say they share in a video that they have $150,000 worth of a very small token. There aren't too many wallets that might own that amount. We're looking at related wallets, deposit addresses on centralized exchanges. We're doing all kinds of small tips and tricks, and those are all explained here in this little tutorial course on wallet discovery. So that can be found below at thebitcoinstrategy.com. And so the premium community of this channel is focusing on that. We try to find new wallets, we share those wallets with others, and then we track the wallets. And then sometimes we find out that some influencers aren't always ethical. For example, here's a video by one influencer that talked about the Champ token just after we got the buying alert. So that's then the way it works, right? The influencer buys a small cap cryptocurrency and then afterwards promotes it on the social media following, and then the social media following is buying into the token, pushing up the price even further. So a classical pump and dump, and the winners are always the people that buy in early, before all of that social media publishing has been done. That's what the wallet tracking is so useful for. And so clearly it's time to make money again. Since October of 2023, more and more money is flowing into the market. The stablecoin market cap is going up. So as per tendency, cryptocurrencies should go up in price. Now the problem is that returns are very concentrated in just a few winners, right? It's a winner takes most game. It's player versus player. And the vast majority of people still lose even in market conditions like this. But yeah, we are tracking those almost 600 wallets. We've got our dedicated influencer trade channel. And when we see insiders like the Memecoin or Based AI team accumulating a very small market cap token, for example over here, KEK, that's a signal of today, then it's likely that the price rises, right? There are all these accumulation buys, and as long as insiders buy more and more of a very small token, things tend to go up. So this is now an appreciation of almost 200% over the span of a week. And so yeah, there are two ways to make money. We can simply just take random tokens and they are likely going to appreciate to a degree. But if you want to take full opportunity of this market, it's better to follow the smart money, right? It's better to buy the virtual protocols of this world when it's just a few cents worth of a token and then moves to several dollars. I'm of course sharing my own trades in premium as well. That goes without saying. And so feel free to check it out. It's currently $125 per month. There should be a link somewhere here on the screen, probably at the bottom right, that leads you directly to that page. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.